Hi believers, this is Amit from Wire Team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market snapped its weekly winning streak of 2025 amidst heightened geopolitical tension between India and Pakistan, which dampened investor sentiment and triggered a shift towards a risk-off sentiment. Domestic equity benchmark Nifty dropped by 1.4% last week, while the small cap and the mid cap index lost 1.9% and 0.8% respectively. The volatility index VIX or the fear gauge rose for eighth straight session to hit a more than 1 month high of 21 level. Initially in the week, market sentiments were buoyed by optimism over the India-UK free trade agreement and stronger than expected Q4 earnings from select index heavyweights. However, gains were later came down as escalating military tension weighed between the two countries. As we speak, India and Pakistan yesterday agreed to an immediate ceasefire across land, sea, and air, and hence it should help in reducing the volatility in the markets. Notably, despite the fall, the broader market remained comfortably above key moving averages, including 20, 50, 200-day moving average, underscoring the medium-term sentiments remains very constructive. From a technical perspective, the benchmark Nifty 50 index is currently hovering around key moving averages across various time frames, suggesting that the potential for a further consolidation can happen. The immediate support is placed at 23,800, and a decisive break below this could extend the decline towards 23,200. On the upside, any rebound is expected to encounter strong resistance between 24,450 to 24,600. In this environment, investors are encouraged to adopt a stock-specific approach and avoid aggressive positioning until greater clarity emerges. Coming on to the ongoing Q4 results, so far the earnings are tepid, neither too good nor too bad. Nifty 50 has shown a median sales growth of 10.48%, while the median EPS growth of just around 7.89%. But the good news is, Nifty small cap has grown faster, with median sales growth of 14.67% and the median EPS growth of 15.39%. We believe there's nothing wrong with small caps and the mid caps, and they are still the place where earning would compound greatly, and a lot of stocks will make wealth. But for it to happen, broader sentiments have to be improved, which might take few weeks. On the flow front, FIIs maintain their buying streak, infusing nearly 5,000 crore into the cash market, while the domestic institutional investors DIIs added nearly 10,450 crore. On the global front, the latest US Fed Reserve policy meeting offered limited reassurance to investors. US Fed policymakers voiced concern that heightened tariff could increase the inflationary pressure and potentially lead to higher unemployment. However, global market sentiment slightly improved last week following some encouraging signals from both US and China regarding a potential resumption of trade negotiation. Looking ahead, the US-China discussions are expected to be a tentative first step towards diffusing trade war that is disrupting the global economy, and the market is waiting to take the signals. At VIA, we feel everything will fall into the place, so US and China will come up with some good trade decision. Key important economic event from the domestic point of view was India and UK agreeing for a trade deal after 3 years of conversation. This will simply result in 99% of India's export to Britain will face no duties. This is remarkable. The removal of a tariff on textile imports will benefit India's clothing industry, and the deal will also create export opportunities for sectors including toys, jewelry, and auto parts. The finalized India-UK FTA has also paved the way for potential early trade agreement with all the European Union. Furthermore, India is expected to soon sign an MOU with the US regarding a trade deal, much awaited by the investors. These favorable developments suggest that the most global and domestic challenges will be effectively managed. While there might be a quarter with growth slightly below 6%, overall India's GDP growth should exceed 6% for the fiscal year, and one should stay invested while maintaining some cash position to maintain use of volatility. At VIA, we are committed to keep a close track of fresh development regarding trade deals and ongoing results to find the best opportunity to invest as the situation develops. So far, for the next week, we feel the market is going to go up as the tension has eased between India and Pakistan, and you should leverage these moments to invest into high quality stocks. That's all for today. Wishing you a profitable trading week ahead. Thank you.